Hello everyone. Thank you for joining us this afternoon. This is Nikita Shetty and we are conducting this exclusive webinar for our channel partners. This webinar is chaired by our CEO and founder of LenDenClub, Mr. Bhavin Patel. We look forward to sharing insights on the overall market situation and how LenDenClub has been performing. We have a Q&A session at the end of the webinar where Bhavin will individually cater to your doubts and queries. Bhavin, handing it over to you.
Thanks, Nikita. Good afternoon, all channel partners. Thanks for sparing some time and coming and attending this webinar. We thought it would be really pleasure for me to have this interactive session with you. We have been conducting many webinars with borrowers and individual investors. And we thought this is the right time when we can have this interactive session with you as well, so that you understand what LenDenClub is, what is going on in the market right now, what is there in the future of P2P and LenDenClub, and how we can be partner with you in that future and grow together. So as the current market situation, the liquidity has been issue in all different kind of markets, whether it is equity, liquid funds, or the fixed income instruments. At this moment, the consumer confidence level has gone down in the market. The lockdown has been imposed for almost 70 days. So is all that these things affecting overall confidence of the borrowers on LenDenClub platform or not? So as a platform in last 75 days, the LenDenClub platform has been faring well. The overall response of the market situation was initially really bad. The first 1-2 weeks starting in April was giving some kind of worrisome data because RBI announced the moratorium and nobody had clue that what should be done. But as every crisis come up with an opportunity, and a lot of time crisis gives a trouble when we don't understand the reason behind it and people are uneducated to understand it. So we started with series of webinars with our borrowers, series of educational videos, series of educational emails with them. We explain them what is moratorium and how it is going to affect your current situation and your futuristic view in terms of credibility. They understood well, and today the situation, we believe that LenDenClub is one of those few lenders who has got really good repayment rate during this crisis time. So if we look at our EMI and the moratorium repayment numbers, during the month of April, around 50% of the borrower paid EMI and around 20-25% paid moratorium. During May, that ratio improved to 55% people paying the EMIs and around 30-35% people paying their moratorium charges. And that ratio has further improved in June because in the month of June, the economical activity started coming back. People have started getting back their jobs or salary wherever there was cut or there was a job loss. So in the month of June, the EMI repayment for the borrowers whom we had given loan during April and May time has crossed almost 80% of number. So in that case, we can presume that within next 1 month or so, the repayment behavior is completely back on the track. There were a lot of reports in the market from really big companies like Bajaj Finserv and all, that how consumers are paying their EMIs and how they are going for moratorium and what kind of risk they are seeing. So that was affecting overall confidence of our individual investor as well as channel partners like you. So we thought we need to educate you about what numbers we have been delivering and how it is affecting the returns of investor on the platform. Now we also found that a lot of time investor as well as channel partners understand that if people are opting for moratorium, that is directly or indirectly a loss for the individual investor. But that is not the case. When customer is paying moratorium, customer is paying the interest on your outstanding loan amount. So you are anyways earning returns on that. Only principal repayment period has been delayed. So let's say a borrower has opted for March, April and May 3 month as a moratorium, and your interest was supposed to come in the month of March was 100 rupees. He is still paying you 100 rupees interest during these 3 months. And at the end of 3 months, he start paying his EMI. So when he's paying EMI, he is again paying interest amount on the outstanding loan amount. So there is no loss which is being incurred by the investor when customer is opting for a moratorium. It is happening if customer doesn't pay the EMI at all, or customer doesn't pay moratorium at all. In that case, investor may see some kind of losses once the moratorium period has been ended. But because of platform's effort and the educational series of educational steps which we had taken, people started feeling the requirement of payment during the moratorium period as well. As we see in the market, a lot of lending institution, credit card companies have been communicating to the borrowers that you can pay even the interest part or the moratorium part at the end of moratorium period. But that will increase borrowers' burden and that may reduce their capability of repayment. So as a platform, as a numbers which we are seeing for last 3 months and specifically for the June, it's really confidence booster, and we don't see that uh, it is going to hamper investors' return in any way. Coming back to the point, let's try to understand when we talk about P2P lending, what exactly it is and how the moratorium announcement by RBI or a job loss of borrower is going to affect returns of individuals. So when we call P2P, it is money given by one person to many person, right? So when your investor is investing 1 lakh rupees on the platform, that money is being diverted to around 200 people in the first month. When some part of the money comes back in EMI, that again goes back to another 50 or 100 odd people. And that ratio keeps increasing as and when the investment amount keeps increasing from 1 lakh to 2 lakh, 3 lakh, 5 lakh, 10 lakhs and more. So one person is giving loan to hundreds of people. So if some people delays or defaults on their payment, that is not affecting directly on the overall return which you are expecting from the platform, which is in the tune of 15 to 17%. There they are protected. Now let's say current moratorium announcement by RBI or any job loss which is happening with the borrower, whether it will affect in the repayment behavior or whether it will affect returns. Our response on this question is no, it is not going to be affecting in a big way. Why? Because if we look at the credit industry, whether it is bank, big NBFCs or us, the problem which these lending institution face with the borrower when the intention to pay is not there. So two things which affects borrower's behavior. One is capability to repay and the intention to repay. When the intentions are not there, it becomes a problem. Then borrower will completely default and he is not willing to repay back. And it is going to affect in on the lender's portfolio returns. But when it comes to capability, it could be short-term issue. So capability issue could be like person lost job, he doesn't have capability to pay because he is not earning. Person's salary has been reduced by 50% for these 2 months. He doesn't have capability, so he cannot pay that. Similar kind of situation we have already seen multiple time in India. So LenDenClub has been into this market for more than 5 years now, and we have seen this kind of situation multiple time. One of the biggest example is demonetization. Because of demonetization, lot of borrowers' salary had been affected. But again, that impact was only for 1.5 months. Post that, all borrowers started repaying their EMI as and when the money circulation was regular. The current situation is also of similar nature. So as and when borrowers are back to their job, which is spoken in the June month's data, as per government reports, as per a lot of statistical reports, everything is expected to back to normal by September month, which is 3 months from now. And that is one of the motivation behind RBI's move to extend the moratorium period up to August month. So that's the reason they have extended by 3 more months, and we are also giving it to selective borrowers when they have faced a salary problem or some other family issues. So coming back to the point, if things are going back to normalcy within next 2 to 3 months time period, how the borrower who may delay some of their previous EMI will be able to pay that. So if we look at the loan portfolio of LenDenClub, we have till date disbursed more than 125 crore worth loan. Almost 90,000 borrowers have taken those loans through the platform. The average ticket size of the borrowing was around 12 and a half thousand. Average income of this borrower, the salary amount has been around 29,000. So if we look at the loan portion in the income of person's annual salary amount, it is less than 5%. So even if 1 2 months income has been delayed or denied, as and when person is back to job, the lending clubs in EMI will be one of their highest priority because it's a very small chunk. When the loan amount is higher, let's say if the person has taken 5 lakh rupees kind of personal loan, or he has been serving around 25 lakh worth home loan, there the impact will be much bigger than what the impact will be on the loan repayment behavior of lending club's borrower. So because the liability percentage is less than 5% of his annual income, there are very high chances that once the economic activity is back, which has already started since mid-May, they will start repaying it. And I already shared with you the data of June month. So that is clearly visible. Now, a lot of time we also gets question from a channel partner that what is the kind of default rate is there on the platform, and what how it will affect my overall returns, specifically in the COVID situation. So we always say that default rate is a relative term. It is never an independent term. If someone is looking at default rate, someone has to look at the overall average interest offered by the platform to their borrower. Let me put it in simple numbers. So let's say a platform is offering average ROI of 20% to the borrowers, default rate is 5%, and the platform charges 1%. In that case, by putting just a simple mathematics, 20 minus 5 minus 1, it makes 14% of return to the investor. However, if we consider the principal loss under the default, then the actual return will be somewhere around 12%. Another platform is offering average ROI of around 25%, same default percentage of 5%, and same charges of 1%. In that case, mathematical returns will stabilize around 19%. If we consider the principal loss effect under that 5%, the actual returns will remain somewhere between 16% to 17%. Now the default rate is same, charges are same, but both the platforms numbers are different in terms of return to the investors. Why? Because it's a relative term and it is related to the average ROI offered on the platform. So if we look at lending clubs data, the average default rate on our platform has been around 5%. The average ROI is slight above 25%, and 1 to 3% of fees is being charged by lending club. And last 3 years, we have been consistently delivering returns in the tune of 15 to 17%, average being 16.5%. So if we look at collectively last 3 months numbers have been prospective. We have been tracking all the international agencies data repayment behavior of borrowers in the China during January, February, and March. And we were suspecting that if similar situation arises at global level and at country level, then possibly we can expect couple of percentage of increment in the borrower's default in a short-term basis. Short-term means around 3 to 9 months time period. To mitigate that, we already increased platform's overall interest rate by average 3% applicable from 1st of April, and which has been into place for last 2.5 months. So as a platform, we always keep looking at international activities, what could be the overall macro level impact on the Indian market, and we keep taking those actions at a platform level to prevent losses to the investors. So even if default rate goes up in this current situation by 1, 2, or even 2.5%, it is not going to affect the investors' income at all. If it goes beyond that, it may have some kind of impact, but that is not what we are expecting in the current market situation. So at this moment, as a platform, we would say to all the channel partners that at an investors level, they may not have any kind of issue if they start investing during this period. However, the COVID lockdown period is over. Now economy is again going at a full fledged, except some of the pockets where the economic activity is still restricted or not going up full fledged. So you can start communicating with your investors, and they can start experimenting with the initial amount of 1 lakh, 1.5 lakh kind of amount, and they start seeing a result in next 3 to 6 months, and post that they can increase their exposure on the platform. So as a platform, you can expect the uh, impact on the returns will be very minimal. As a platform, we don't have any asset liability issues. So there could be some, there were certain news regarding debt mutual fund issues in the market, or NBFC issues in the market, or bank issues in the market in last couple of years, which we have been seeing, right? So P2P platforms are completely safeguarded against any such kind of issues, because P2P platforms are not taking ALM in their hand. When I say ALM, it is asset liability match. When we say asset liability match, how it works? So when we talk about bank takes money from depositor and lend that money to borrowers. While they are doing it, they are taking decision, and that is the reason they have to completely keep looking at how much depositors have given, how much borrowers has taken, and if depositors will demand money, how I will be able to repay that money. And that is a constant effort which bank has to keep putting up. However, that is a case with mutual funds and other intermediaries which are managing money. In case of P2P, ALM doesn't arises, because whatever money is being invested by investor, that is directly going to the borrowers, and when it is coming back, it is going back to the investors. There is no decision taken by the platform in any way. Neither we pay you anything on the money which is being idle on the platform. The moment we start taking that kind of call, it could be really against the regulatory laws or whatever operational guidelines has been set by the Reserve Bank of India. So in short, at this moment, LenDenClub as a platform doesn't foresee any kind of adverse impact on the returns of the investors on the platform. Last 2 months origination, April and May, has been giving really good results, and it has not affected uh, or resulted into any additional delays by the borrowers, or more kind of moratorium opting by them. Opting moratorium is not affecting investors' return, because that is the interest income which is coming back to the investors. So whether moratorium comes back or EMI comes back, it is adding similar impact on the investors' return. So this is what we wanted to convey you during this session. With this completion, I would take up certain questions and answer from you. We have been collecting a lot of questions from you. My team has been interacting with you very closely. So we have some questions which has been shared by you. We will be also taking certain live questions. So my colleague Nikita will go ahead with that.
Thanks a lot, Bhavin, for such comprehensive and helpful insights. Let's begin with the Q&A session. Our first question by Mr. Rajan is, what strategy my customer should follow on your platform to get returns of 15%?
Okay. Uh, so, Mr. Raju, the simple strategy which every P2P investor should follow is like this: maximum diversification, consistent investment, and clear horizon of at least 1 to 2 years, right? These are three pillars of generating returns from the P2P platform. A lot of time, what happens is, if you don't diversify well, that affects very negatively on the portfolio. So wherever we go in the world, we if the P2P portfolio is diversified enough, investor will always earn good enough returns. We have been consistently delivering 15 to 17%. You can expect that kind of return if the investor is diversifying well, keeping money for at least 1 to 2 years time period, and keep reinvesting on a timely basis. So money should not remain idle on the platform.
Our next question by Mr. Rahul: how LenDenClub maintains our returns and reduce overall risk? Let's assume my client is investing 1 lakh rupees for 1 year, and out of that, assuming that 10,000 principal is in default, what my explanation should be to my customer, how to convince them to add more amount to your platform.
Okay. So see, let's take a simple example that this 1 lakh rupees has been invested in 6 months tenure worth loans. Okay. So during 1 year, that 6 months tenure will be repeated 2 times. So the total investment by that investor will be around 2 lakh rupees. 1 lakh is initial investment that is received back, and that is again reinvested. So out of 2 lakh rupees, the investor has faced a default of 10,000 rupees, right? Which comes to around 5% of his overall investment. Let's say the average return to that investor on the invested loan has been 25%. So in that case, the example which I already explained you previously, that suits well. That out of 25,000, which might be his overall returns, which he might have received, out of which 5% has gone into default, the remaining could be platform fees, and net he might be earning as net return somewhere around 17%. So you can explain the client in the way that the default are part and parcel of P2P investment, right? Whenever there is any lending, there will be default. But if those default are relatively good compared to the returns which are being generated on the platform, those are good enough to set off against the default which are happening. So don't worry about the default. Always look at default in relation with the interest rate which has been earned by the client. So a lot of time we get misguided by the default percentage, the number of defaulted loan, but we never look at the positive part of the performance, which is more important, which is the net returns which you have received. So on our platform, you can see the net return shown on the platform. You can see XIRR as well. And for channel partner also, we have extended all this information for all your clients. So you can observe their portfolio and explain them in an efficient way. Nikita, next question. Nikita, are you there? I
Yes.
think that is.
The
Yeah.
next question by Mr. Manan is: due to COVID and moratorium, we have been trying to be slower on the P2P side. Also, customers are looking forward to more of capital preservation than capital investment due to the losses with other financial instruments. What would you like to say about it?
Every crisis is the opportunity. That is the only thing which I can say. Any apart from the proverb, which is very relevant if you look at the crisis time of 2000, 2001, 2008, 9, or current one. Every crisis comes up with the opportunity, and the time tastes different instrument on a very strong waves. So current wave is also very strong, and P2P instrument is being tested against that. And the numbers, the returns which we have been generating last 3 months, the performance is very much consistent with what it has been previously. Capital conservation could be view of majority of the investors, and we would also not say that it is completely wrong. It is valid because a lot of people are not clear about what could be the situation after 3 months, 6 months, or 12 months. That should be the point of view, and some part can be maintained in the liquidity. However, P2P investment on LenDenClub platform is also in a way liquid investment. So if you look at the average tenure of the loans on our platform, that has been around 3 months. So on a monthly basis, you are anyways have 30-35% of liquidity available to realize, right? So you can take back whatever EMIs are coming back in between. Definitely, it is going to impact your returns because if you move out money in between, you cannot get desired returns. But that is still okay if there is any liquidity requirement at your end. Apart from that, looking at other instrument, a person should not be worried about all the instruments, right? So as you all have been wealth manager for so many number of clients, you have seen multiple cycles of stock market. You have seen multiple cycles of mutual fund giving negative returns and then giving positive returns and all. So you have been through all such kind of situation. You have dealt with your clients during this kind of possible negative cycle and possibly opportunistic cycle. So you can explain them and try to explain them a logic of diversifying some portion of their overall wealth toward P2P investment on our platform and see the impact, how it will affect overall impact of his portfolio.
Thank you, Bhavin. The next question by Mishesh Ramesh is, for NRI investors, can we have a more streamlined registration and onboarding process? Can we have a system that allows us to control our investor accounts so that it will be easier for NRI investments?
Sure. So Rameshji, we already have channel partners or wealth partners managing their clients' portfolio. So that facility is already there. If you have not activated that facility, you can get in touch with Nikita or any other RM who has been dealing with you, and they will help you activating that. Apart from that, there are certain rules and regulations which we require to follow up in terms of KYC. We will still look at how we can reduce that burden when it comes to NRI investors and see if we can take any additional action from our side.
The next question by Mr. Zamir, what portion of portfolio allocation you suggest into P2Ps under this current situation?
Sure. So it completely depends on the size of the portfolio, right? So there could be client who has 5 crore worth of overall wealth invested through you. In that case, we cannot put huge percentage because there are limitation of P2P investment. Second thing is that if portfolio size is very small, again, certain percentage may not be relevant to that person. So in that case, the best solution which we always suggest to our channel partner or the wealth partner is that start with certain amount anywhere between 1 lakh to 5 lakh rupees. Let clients see the result over next 3 months to 6 months time period and then increase it. Tomorrow, we don't want you also to be in a situation when client comes back to you and say that, I do not want to invest more amount in this particular instrument. Let client himself be convinced about the instrument before you start pitching them to increase the investment amount. And this is the strategy we have been always following up with our individual investment. We never push them to increase the investment on the platform. We ask them to start with certain small amount of 1 lakh or so, and then based on the return generated in that portfolio, they themselves keep pushing more and more capital on the platform. Even during last 2.5 months, when the lockdown was going on, we have stopped all kind of sales activities or relationship activities with individual investors. But still, we were seeing almost 40 to 50% of the pre-COVID time capital flow coming on the platform without any kind of follow-ups with them. And that was coming just because they are so much convinced about the P2P investment on LenDenClub platform. Also, during April and May month, we had reduced the number of loan percentage processing. But during that period also, the existing investors were not taking out any kind of money. And they have been keeping those money lying idle on the platform for average 8 to 10 days so that their number comes in and that money can be deployed into new borrowers. So that is the kind of result we have seen on the platform. So I would suggest that let's start with small amount of any kind of client. Let them see the result, or you observe the result and see the overall impact in their portfolio and increase that amount.
Got it. Thank you so much, Bhavin. The next question by Mr. Praseed is, do you think as we are only catering to the salaried class and amid the COVID, there have been many job losses and unemployment? Do we think that lenders' capital at your platform are at risk?
No, it would not have that kind of impact. Whether it is business community or it is salaried community, both are being impacted by this lockdown and the COVID crisis, right? And the impact percentage would be different. It differs geography to geography, it differs size of the business and size of the salary person is getting. But if we look at the overall situation, salary could be deferred because of job losses. Person may not get salary for 1 or 2 months. But as I explained earlier as well, that LenDenClub loan amount is very small for any person, whether he earns 15,000 rupees or he earns 50,000 per month. The percentage of this amount is less than 5% of his annual salary amount. So as and when the job is started back or the employer start paying salary back, the first priority for the customer would be to pay LenDenClub's EMI. So in that way, we don't see that it is going to affect adversely because we are into a salaried segment.
The next question by Guru Rajan Venkataraman is: do LenDen take any financial responsibility for any loss incurred by the loan defaults?
So as I explained earlier, why P2P model is more safeguarded against any such kind of issues, where whether it is in terms of ALM, whether it is in terms of return generation. So the P2P platforms are not allowed to give any kind of return assurity, return guarantee, or any kind of hurdle rate or bare minimum returns which platform will be giving you and all. What P2P platform offers is a pool of borrowers which are verified, and we are constantly monitoring them because the performance of the platform will ensure that more and more investors are coming on the platform because they are getting better returns. However, any kind of guarantee, warranty, hurdle rates, minimum rate are not allowed as per P2P guidelines by the Reserve Bank of India, and we don't offer any such kind of thing.
Thanks, Bhavin, for the comprehensive insight on this question. The next question by Mr. Mayank is: what is asset liability mismatch scenario with LenDenClub?
Okay, I think it's just extension of the previous question. So in case of P2P platform, there is no asset liability match which we have to look at, because whatever money comes from you goes directly to the borrower. Whatever comes back from the borrower comes directly to the investor's account. So platform doesn't hold this money or doesn't decide which money I want to give to whom. So this question doesn't arises. So no ALM question comes in case of P2P investors, and that is the case with LenDenClub platform as well. So tomorrow, if something happens to the platform, it is very clearly defined in the system which borrower has to give how much amount to this particular investor, and anybody can manage that cash flow, including the trusteeship company which manages the overall escrow account mechanism on our platform.
The next question by Mr. Sanjay: for a lock-in plan, once the lock-in period expires, how is the investor placed in terms of withdrawing the entire amount? Will the algorithm invest in such a way that the majority of the capital would be available for withdrawal once the lock-in is over?
Yes, so algorithm works in the same way that lock-in plus 1 month, majority of the capital should be available in the account to be withdrawn. However, before that time is reached, the platform will give you an alert whether you want to renew your investment plan or whether you want to withdraw the plan. So accordingly, you can decide. If you are planning to extend your investment time period, you can renew the plan, and system will keep investing your investment.
The next question by Mr. Ashish: how to measure the health of P2P platforms?
The health of P2P platform can be measured from the overall loan amount which has been disbursed by the platform, number of loans of the platform, the time period over which platform has been performing, overall rate of interest, and the default number. So that will give you overall net return number to you. So combine all these 5, 6 numbers will give you enough idea about how the platform has been faring. Apart from that, you can also track whether the platform name is there on the Reserve Bank of India's website or not, because all registered P2P lending platform will have name over RBI's website. You can find that link on our platform as well.
Mr. Naveen is asking, do we have any feature that helps my customers invest their money automatically on the platform?
Yes, absolutely. So we have both options available for all investors. You can invest manually by picking and choosing your borrowers, and you can set auto invest, wherein you can set your criteria, or you can allow system to whichever borrower comes in a FIFO method, they will start investing into those borrowers. So that facility is already there. You can get in touch with your RM to get more understanding about that feature.
The next question by Ms. Apurva is, can I choose what kind of borrowers to invest into on the platform?
Nikita, can you repeat the question?
Yes, absolutely. Mr. Apurva has been asking, can he or his customers choose what kind of borrowers to invest on the platform?
Yes, absolutely. So you can choose the borrowers in both the type of investment, whether you are doing manual investment or you are doing auto invest. In both cases, you get option to choose the kind of borrower you want your portfolio to invest into.
The next question by Arpit is, if LenDenClub shuts down, then what?
I think partially I have answered this question. So in case of LenDenClub shutting down their business, uh, the payments are clearly well defined in the system that which borrower belongs to which investor. And as and when the amount received back from the borrower, those can go back to the same investor. And that is the reason RBI has envisaged the role of trustee in the whole escrow payment mechanism. So in case of any P2P platform getting hampered by any financial issue or by any operational issue, if they are shutting down, those can be taken care by trustee by managing this kind of payments directly coming from the borrower to investors. So it doesn't, ideally, it doesn't affect the investor in any way.
Got it. The next question by Yugam Joshi. I think that there may arise many defaults during and even after the lockdown, since these few months have done a serious impact on the cash flow of the retail borrowers. So, how will LenDenClub take care of the situation? And what should be the ideal time to start aggressively investing into P2P industry?
Okay. So the way retail borrowers' cash flow might have hampered, the platform has also offered them moratorium. And how a moratorium helps them is if the EMI of that borrower is 4,000 rupees per month, if the borrower opts for moratorium, he just pay 400 or 500 rupees, whatever is the interest applicable on the principal outstanding. So it is securing borrower against any kind of high amount going out of his pocket. And when as and when his job is again back or his salary level is again back to normal level what it was, he can start paying his EMI. So that is the reason the cash flow has been remaining constant on the P2P platform, specifically with LenDenClub, and the returns of investors have not been hampered. In case of aggressive call or going aggressive on the P2P platform, specifically with LenDenClub, we would say the opportunity is always there. Today also that opportunity is there. The data which has been giving numbers over last 2 months are really encouraging. We haven't seen much impact of this COVID crisis on overall repayment behavior of the borrowers because of moratorium option. So either they are paying EMI or they are paying moratorium, and the income level has been consistent at a investor portfolio level. So you can go aggressively as per the opportunity available on the platform.
The next question by Ashish. How much percentage of borrowers on your platform have opted for moratorium?
So closely as I mentioned earlier also, that in initial phase, closely 40-45% borrower wanted to go for moratorium. And in the first month, which was April, we received around 25% borrowers are paying moratorium charges. In the month after that, we received around 30-35% borrowers paying moratorium charges and opting for it. And around 55% of borrowers are paying their actual EMIs, regular EMIs.
The next question by Guru Rajan: what are the risks involved in LenDenClub's platform for investors or lenders?
The risk involved in lending club platform or any P2P instrument is the credit risk of the borrower. So if borrower defaults in his repayment, that may impact on the investment of the investor. However, on lending club platform, the average investment amount is just 500 rupees. So if you are investing 10 lakh rupees, that is being divided into 2000 people, and eventually you may have around 4 to 5,000 borrowers in your investment portfolio. So mitigation of that credit risk is very well being taken care by the platform.
The next question by Mr. Vasu: can I manage my customer's portfolio on the platform?
Yes, Mr. Vasu, you can efficiently manage portfolio of your clients on the platform. We have given enough facility on the wealth partners dashboard to do that. You can take help of your relationship manager on this point.
The next question by Mr. Varun: what percentage of clients' portfolio allocation need to be done for an increase in overall alpha?
Okay, so again, that depends on the overall percentage, overall size of the portfolio of the client. Let's say if client portfolio size is 1 crore rupees across all the instrument, even if you diversify 8 to 10% of that amount into P2P, and the average return on P2P is, let's say, 3% higher than other instruments, it will have significant impact at a portfolio level. But if the portfolio size is just 25 lakhs and you are investing 10 lakh, it could be risk at a client level that huge amount of portfolio is going into one instrument. So you may have to look at client to client level. You can put a calculation by keeping in mind that the overall returns on the platform could be around 15% and derive expected alpha for the client.
We'll be taking up one more last question for the Q&A session. Ms. Arpita wants to understand what is the minimum ticket size for all the investment options available on the platform: gold, silver, and the basic plan.
So on either of the plan, you can invest 500 rupees per borrower. So there is no restriction in terms of investment in particular borrower. So you can reduce the ticket size and increase your diversification ratio. However, if your question is pertaining to overall investment amount of the investor, then we would suggest that any wealth partner, we always say that they should start with investment of 1 lakh rupees per client so that they can see a possible good returns over the period of next 3 months and then increase the investment amount. Nikita, are you there?
Yeah, Bhavin. Bhavin, thank you so much for sharing all the comprehensive and helpful insights. I definitely think this must have been helpful for all of our channel partners. We have been tried taking up all the common questions which are relevant to everyone. However, if we have any more questions, you can directly drop us an email on invest@lendenclub.com. Thank you for being such an engaging audience. Thank you, everyone. Thank you so
Thanks,
much,
everyone.
Bhavin, for joining us this afternoon.
My pleasure. Bye.